organized business structures. Today, what we're going to do is go over a very practical view of the reasons for having a business entity that you can work out of. And so I'm just going to go right to a slideshow, if you don't mind. I'm going to share the screen. And share. Okay. So the title of today's talk is, do independent contractors need to do business as an LLC? So I'm going to just throw this out there just to start with. An LLC is an entity, and there are numerous types of entity. And when I start our initial discussion today, I am going to be talking about an entity as a general principle. We're going to later on compare the difference between an LLC and an S corporation, and hopefully you'll see why as we get into this. So as an overview, we're going to look at the whys and wherefores of business entities. We're going to discuss the 3 best reasons to form a business entity and the biggest business trap that independent contractors face, and the biggest step that you can take towards your own success. And that has to do with this talk. So we have this lovely picture here. Most of you probably haven't seen one of these before, but I grew up in New York City, and this is what we used to call a checker cab. And interestingly enough, the taxi cab industry has been at the forefront of entity formation. And the biggest cases that we have that have gone all the way up to the appeals court in New York and the Supreme Court of the United States are cases about taxi cab companies. And it has helped us really define the value of being an entity and what an entity structure looks like and what you can get away with and can't get away with as an entity. So we're going to look at a case that discusses a classic taxi cab business entity. And what taxi cab companies do is they form a corporation, and that corporation owns multiple corporations. And within each of those corporations, there are 2 or 1 taxi cabs. And each of those taxi cabs belongs to its own corporation. So if there is an accident, if you are riding in a taxi cab, the only assets that you can go after are the assets of that specific corporation that owns 1 or 2 taxi cabs. Now, taxi cabs in New York City have medallions, and they are worth millions of dollars, but they're all leveraged with mortgages. So for all intents and purposes, a taxi cab is worth nothing. So if you sue a cab company to get their taxi cab, you get nothing. So what's left over? Insurance. And in New York, there are minimum amounts of insurance that taxi cabs are required to carry. And the limit of that policy is all you're going to get in an accident. And I can tell you that my sister was injured. She broke her jaw in a cab accident, and she ran into this problem. And it's been challenged many times, and the cab companies have always won. So let's take a look at this. There's a 1966 New York State Court of Appeals case. That's the highest court in New York. A company owned by a gentleman named Carlton owned and operated a cab company that set up 10 separate corporations that he was the primary stockholder of each of them, and each held the minimum amount of liability insurance as required under New York state law. Each company was a separate legal entity. Each one was run by him, and each one owned 1 or 2 cabs, as I described to you earlier, and each of which had a medallion mortgage to the hilt. One of his cabs negligently injured a pedestrian, a gentleman named Volkkonsky, who could only sue the company that owned the cab And the cab only, because of all the mortgage leverages, he could only get the amount of the insurance limits of the policy. So they wanted to go after Carlton personally. They alleged that this was a fraudulent way to carry things on, and that it was of no benefit to the public. So the court, in this case, Volkkonsky versus Carlton, asked the question, was Carlton personally liable for the injury to a pedestrian, or was he attempting to defraud members of the general public? And the court ruled that a corporation with minimal assets is a valid corporation and that this cannot be ignored. A corporation that is operated for the benefit of itself primarily is not a basis for making the shareholder liable. So only the corporation is liable if it's a corporate activity. Carlton, in this case, followed the applicable and relevant regulations and laws regarding taxi cabs. He had the minimum amount of insurance, which was set by the Department of State, and he was following what we call the corporate formalities. And therefore, he himself was not personally liable, only the corporation was. And in this case, the insufficient capitalization, which really is the argument for, trying to pierce the corporate veil or going after somebody individually, this rationale has not been changed by the courts. They don't want to chill entrepreneurial activity, so they haven't upset this apple cart. And to a lot of people, this seems like a fiction. I'm going to point out to you, since we're all in the real estate industry, we work with fictions in our business. Things like seller's concessions are a fiction. We get a basic price of the house, and then we pump it up and we sell it to the bank with their participation as a house that costs more than we actually agreed to pay for. And that's a fiction, and it's perfectly legal. And this fiction of an entity is also perfectly legal. So what are corporate formalities? In order to establish a corporation or an LLC, again, I'm using the term broadly and as an entity, there must be a corporate filing. In other words, you might have to walk over to the Department of State or have somebody do it and make a filing declaring that you are this entity. You must keep corporate records of your meetings and decisions. So somebody's got to take minutes, and you got to put them in a book, and you have to keep up with that. And you need to keep separate corporate books and records. So you would go to the bank with an EIN number and your corporate filing and open up an account, and you would put your income in there and and disperse things from the corporate accounts. And you must meet and make decisions according to your corporate bylaws. So where do LLCs fit into all this? An LLC is called a limited liability company. It can operate as a corporation. It can operate as a partnership. It can operate as a trust. It's a very flexible form of a corporate entity. It operates or can operate as a pass-through. And when you decide to operate it as a pass-through, the LLC pays no corporate tax. If it elects to be a corporation, then it has to pay corporate tax. So that's the beauty of an LLC, is that you can treat it as a pass-through and that it doesn't have to be double taxation. In other words, you get taxed on the corporate profits, and then when you take those profits, you get taxed yourself. That's the part where you have a tax advantage by establishing an LLC that is not a corporation. So pass-through means that the owners or the members include their allocated profits in taxable income under their individual income tax, not the corporate income tax. So now let's look at the types of corporations there are. There are C Corps and there are S Corps. A C Corp is a traditional corporation like stockholders, you know, that are publicly traded in the New York Stock Exchange. It's double taxed, first on its profits and then on the shareholders' income. There's no way of getting around that. That's what a C Corp is. And generally speaking, as an individual entrepreneur, you do not want to be a C Corp. But you have another option, and that is that you can be an S-Corp. And an S-Corp is also a pass-through entity like an LLC. Only the owners and members' profits are taxed. To be an S-Corp, you have to request recognition as such by the IRS, and it's just a formality. There's a form you fill out, you submit it, and bingo, you're an S-Corp. So let's look at a comparison between S-Corp and LLC. An S-Corp may provide stronger liability protections if you are a single owner. It may. You can be a single owner as an LLC. The law is a little gray there as to sole member LLCs in terms of what your protections are. It has not been as tested as it has been with an S-Corp. The filing fee for an S-Corp is $125, and an S-Corp pays franchise taxes, which is based on the amount of income. And franchise taxes are not really a lot until you're making a lot of money. So franchise tax is not something to be overly concerned with, in my opinion. An LLC, if it's not set up as a corporation, does not pay franchise taxes. If it's set up as a corporation, it does pay franchise taxes. And a single member LLC is generally classified as a disregarded entity. So we state that in the LLC agreement that it's a disregarded entity, and that means it's an entity for a single person. There's a $200 filing fee for an LLC with the Department of State. And also, in order to have legal standing, you have to advertise. The county clerk sets up a schedule of where you advertise in for these 6 weeks, and you hire these newspapers, and they send you an affidavit after the 6-week period that you send to the Department of State that you fulfilled that criteria. You will not have legal standing as an LLC unless you advertise. An S-Corp does not need to advertise. And the other issue with an LLC is that you have to pay a minimum of 15% withholding tax on shareholder income. So when we sit down with clients, we go over all this and we decide which makes more sense for the client, whether they want to be an LLC or a corporation. And we review the expenses of such and what your protections are. My own personal preferences, quite honestly, are for S-Corp. I do think that it gives you a much more ironclad liability protection because of the lack of clarity in New York state law about sole membered LLCs. And also it's less expensive upfront costs on a corporation, on an S-Corp. So does anybody have any questions who's here yet before we go to the 3 biggest reasons to form and operate as a corporate entity? Dead silence.
Mike, okay. Once a LLC is established, can you convert it into an S-Corp, or you'd have to create a new one in order to have an S-Corp?
No, you can convert it into an S-Corp, but you're taking away some of the advantages in the beginning, Matt, because if you spent the money on the filing fee and spent the money on the advertising, you know, that's all gone.
Okay.
Are there any income levels or profit levels that differentiate who should set up an LLC versus an S-Corp? Like, would you recommend, if you know what I mean by that question, like, is there a threshold for how much income you're generating?
Yes, I do understand what you're saying. What I'm going to tell you is the issue is the number of people who are participating and not the amount of money you're making.
Okay.
Because it's just, an LLC gives you a much more flexible business structure to work with partners.
I see.
All right, so the three biggest reasons to form and operate as an entity. Reason number one, if you are an individual and you are a business, you need to transition from your private self to your professional self to do business. It is too easy to intermingle your personal accounts, your personal life, and everything else with your business if you do not have a separate structure to do business as. And an LLC or a corporation provides that legal structure and allows you to make that transition. It's a structure separate from your private life. It's a structure that's recognized as a separate entity. And it's a mechanism for creating a separate entity with a tax ID number, a checking account, and doing expense accounting. Thus, when you have that, you can dress the part and also act the part with impunity and have a formal structure to back it up. This is a substantial thing. Two, an entity will help you protect your personal assets. Something goes wrong, like a taxi cab accident, and you are an independent contractor, your personal assets are exposed. In Carlton, if Carlton was not a corporation, the guy who was struck would not have relied on just going after insurance. They would have personally sued Carlton for the liability, and he would have won. But Carlton was a corporation. The corporation was insured, and therefore only the corporation's assets are liable to somebody who's been injured. Now, you are not taxi cabs, but if you're in the course of conducting business, for instance, you're in a car and you're in the course of conducting business and you get into an accident and there's a client with you, who are they going to sue? Are they going to sue you or the business? That's you know, something that you would want to have looked into for yourself. If you are operating as an entity and provided you are acting in good faith with your agency obligations, only the entity's assets are exposed. Carlton was successful because he carried the required insurance for his taxi cab, and he was following the corporate formalities. Very important. So it's a separate entity from yourself that is liable for you. It's a great thing. And finally, there are tax advantages to being an entity. It provides a structure that can save you money on self-employment taxes. It provides formal evidence of your work expenses as opposed to separating them from your personal expenses. If the IRS has to audit you and you're putting your paychecks into your personal account and taking your expenses out of your personal account, bad. You know, how do you clarify what's a business expense from a personal expense? That you can get into enormous problems with the IRS over that. And thirdly, it allows you to avoid paying corporate tax if you are a pass-through entity. So literally all you're being taxed on is the money that you draw out of the entity. Any questions before I go into the last sections here? Yes, okay, all right. So what is the biggest business trap independent contractors face? Any opinions about this? Okay, well, we discussed this earlier. Mingling your personal and professional life, okay? That is the biggest trap, and I can't tell you how many people allow this to happen. It is a substantial number. When you're an individual doing business, if you're not an experienced business person and haven't been through the ropes a few times, people are hesitant to set up these entities because there is an expense associated with it and they don't understand it. But you really need to explore these things because you know, we all hope that you guys are successful, that you know, you're going to make a lot of money as a real estate agent. And once you become successful, you become vulnerable and you leave yourself exposed if you do not separate your personal and professional life. The biggest step you can take towards business success, you want to act and appear professional because customers respond to the way you present yourself. Now, me as an attorney, I actually had a course in law school, and they taught us how to dress like an attorney. There is a uniform that you dress up with. And I am suggesting today that part of that uniform is having an entity to support you. So here's a shameless bit of self-promotion. I am an attorney. My name is Michael R. Siegel. My office specializes in business entities and real estate, and we can help you create a suitable business structure that makes you more professional, protects your personal assets, and provides you with the tax advantages that an entity allows you. We are giving a special offer to real estate professionals that my office will only charge you $125 and the actual filing fees. And for that, we will prepare, file, and establish a business entity for you, along with creating bylaws, an operating agreement, supplying you with the EIN number, and providing continuing counsel as you launch and operate your entity. It's a great deal. I'm happy to offer this to you because we all have overlapping interests, and I hope you'll take advantage of it. This is my name, my email address, and my phone number so that you can contact me. I'm going to hover for a minute or so that if you want to write it down, you can. And I hope this wasn't too dry. I hope it flowed enough so that you all can understand what I was trying to explain to you about becoming an entity as a business person. And I'll give you a final opportunity to ask questions out there. Millie, Matt, Corrine. All right, no questions.
I actually have
Corrine?
a question.
Susan, yes.
Oh, it's Susan. Not...
Hi, thank you.
Hi, Susan.
I appreciate it. I'd like to know if the same rules apply if you're setting up an LLC for investment property.
Yes, the same things apply. Look, it's very common practice to set up an LLC for an investment property, and you want to use the taxi cab model when you're doing investment properties. And when I say that, you create an LLC or an entity for each property that you purchase. You keep a separate set of books for it, and you only run that entity for as long as you own that property, and then you extinguish it, you know, when it's over. So every time you buy a property as an investor, it should be in the name of an entity, and it should be the only asset that that entity has.
Thank you.
You're welcome. All right. Well, I appreciate you all coming today. And it's my pleasure to share this information with you. And those of you who get to watch this as a video, I hope you will learn something. And I hope you'll feel free to contact me about this at your leisure. Thanks.
Thank
You
you
all
so
have a
much,
nice day.
Michael.
Thank you, Michael.
You're welcome.
Have a great afternoon.
Yes, thanks again.
Bye-bye.